analyst from UBA, will join us to weigh investors' appetite ahead of next week's 417 billion naira T-bills auction. And later we'll unpack Moody's 2024 outlook for sovereigns in the West Africa Economic and Monetary Union. And lastly, we'll look at the benefits of renewable energy. You can be part of these conversations. Connect with us using the hashtag CBWA410 on the X app. Moving on to our first conversation on closing bell West Africa today, traders as UBA say that investors are maintaining a cautious stance as they focus on next week's 417 billion naira T-bills auction. Kenneth Onuoha, a team member, assets and liabilities at UBA, joins me now as we assess the market response to the central bank's latest reforms. Thank you so much for your time today, Kenneth. My namesake Kenneth here. Let's get your thoughts on the market this week so far.
All right. Good afternoon, and thank you so much for having me, Kenneth. The week has been very uneventful on the money market and fixed income assets. Typically, what we have seen in the money market space has been that liquidity has been quite tight. We had depressed liquidity levels, especially following the bond settlement on Wednesday, where over 418 billion was actually sold at the bond auction. What that led to has been increase in rates. We've seen rates spike to about 21 on the OBB and 22% at the overnight window. Typically, on the fixed income space, what we have noticed is on the treasury bills aspect, what we have seen is that there's been very minimal activity. It's been really trading on a very quiet note. What we have observed primarily has been that we've seen interest around the 25th of January bill, which has been the 28th of January bill, which has been where the interest have been primarily. Other than that, there's been not much activity to report there. Everybody's, like you rightly said, the activities have been focused, or attention has been shifted to the forthcoming NTB auction, where 417 billion will be up on offer. We expect it to be oversubscribed, even though the liquidity situation is still very tight. We have had depressed liquidity levels in the system, but we expect that this would be oversubscribed, and that's where we see, that's what the expectation is at the treasury bill space. On the bond side, what we have noticed is it has also traded on very quiet sentiment. What we have seen primarily there has been the market has been flooded with offers on the 2038 and 2053s maturities. However, there has been very little trade consummated because of scarcity of bids. We do expect that with improved liquidity levels, we would see more activity in that regard, and then that's our expectation on that sphere.
Yeah, but let's get to your take on the currency side. Yeah, we saw quite a lot of developments this week with the reforms coming from the central bank. And from your side, how do you think this is going to impact sentiment in that space going forward?
All right, so like you rightly pointed out, the main action has happened on the fixed income, on the FX side of the business, of the market. Primarily, what happened on the 31st of January was that we saw the CBN issue two circulars. One was to address the NOP limits for banks, where the limit that we hit here to used to be at plus or 10% of shareholders' fund unimpaired by losses had been revised to minus 20% short and 0% long. What that led to was for banks to indeed keep with the prudential guidelines, they had to sell off their excess balances into the market, which led to an increase in supply in the market. That translated into what we saw at the NAFEM close of business update at NAFEM yesterday. We saw that the turnover has increased, volume of the trade consummated increased to $156 million, which coincidentally is the highest we have seen since the turn of the year. So it would naturally boost the supply in the market. I guess the game is one of supply and demand, and if that occurs, if we see more of the supply in the market, naturally that would of course translate into the strengthening of the Naira, and that is what we hope for. Of course, we expect to see more creative ideas from the CBN, which would naturally translate into the Naira weakening against the greenback.
Let's get to your thoughts for next week then, and your expectations for the treasury bills auction for next week.
Oh, like we have seen in previous auction, if we had to take a cue from that, we would naturally expect that the NTB auction, wherein 417 billion is expected to put up on offer, we expect to see increased subscription levels. That is the general sentiment of the market. The rates would obviously, remember the stop rate at the long end, printed at about 11.54%. We expect to see increase in line with previous auctions, an increase in the stop rates at the NTB auction on the 8th of February.
Yeah, but looking at the liquidity situation right now, still in deficit now, but what are your expectations for the rest of Q1?
Well, just a few hours before I came on, the CBN did issue a circular stating on guidelines for the CRR. Now, what we have seen is that the summary of this guideline essentially is the fact that banks are to expect the reversion to CRR debits that are structured. So there will be a structure around the CRR debits where we would see the guideline, the current guideline of 2.5% of your weekly average increment being debited from your account. And then they also noted that CRR debits will also be passed on to, in line with the LDR conversation around banks keeping or meeting the LDR requirement of 60%. So what we do expect to see over time would be that the banks can better plan, and that would of course help the liquidity situation over time.
Yeah, definitely quite a lot happening in this space in Nigeria. I have to keep track of these circulars coming up in the course of the week, but I'm definitely keep an eye on that space. Thank you so much for your time today. I've been speaking to Kenneth Onuoha. He's a team member, assets and liabilities at UBA.